Well, good morning. It's Thursday morning, and that means it's weekly export sales day. It's so exciting, and we have the data for you. We can go right to the numbers if you want, and we can see what kind of sales we had last week. Is it a good thing or a bad thing? Well, you be the judge. Let's go ahead and take a look at our corn sales for last week. We'll bring them up here on the screen, and we'll talk about it with our guest, Brian Hoops of Midwest Market Solutions. So, on the corn, we had a total of 778,700 tons that were sold this past week. Soybeans were 703,900 tons. And we had the soy meal at 253,100 tons. Soy oil, 3,900 tons. And we had the wheat coming in at 437,900 tons this past week. Now, we also had numbers for grain sorghum and cotton and rice. And on the grain sorghum, we came in at 67,500 tons last week. Upland cotton, only 92,700 running bales. Now on the rice, we had 67,200 tons, almost identical to the grain sorghum sales. And let's see what we did on the overnight trade. We'll go ahead and take a look at our quotes that are provided by bar chart here. We'll go to the corn board first. Right now on the corn, we had the December contract finishing up only 3/4 cent lower at 481.5. It was a pretty quiet night. Look at that range, only about 3 cents from the top to the bottom overnight. Soybean trade, we had November a 1/2 cent higher at 13.50 1/4, so there wasn't much going on there either. It did have about an 8-cent trading range, and it closed about a nickel off of its high. So a little bit of a mixed tone in the soybeans. Now looking at the wheat, in Chicago this morning, December was down 3 1/4 at 594. And again, kind of in the middle of its fairly narrow trading range. Kansas City wheat, we were down 4.5 cents this morning, December at 740 1/4. That would put us about a nickel off of our overnight high. Minneapolis wheat today had December finishing overnight a 1.5 lower at 786. That's just a 1.5 from its high of the overnight trade, but it did close lower on the session. On the cotton market this morning, we have December at 87.28, so it's rebounding a little bit. We're up about 39 points right now. All right, we have Brian Hoops with us. And Brian, let's talk about the weekly export sales numbers. Your take on the first glance at it here this morning.
Good morning, Marlon. Well, so the export numbers, once again dominated by China, as that's about 30 million bushels of corn, and they were buyer for about roughly 7 million bushels of that, including switches from unknown destinations. For soybeans, it equates to right around 26 million bushels of soybeans for the week that we sold, and China was a pretty large buyer, around 10, 11 million bushels of that. So it really stands out that China steps in and buys, and especially when that unknown destination category gets switched over to China. Now, they're not such a big buyer of the wheat market, and we're just not selling that much wheat. These numbers are respectable, but they're really not gaining us any ground as far as telling us that we have a demand-led type bull market, which is what wheat really needs right now, and what corn and soybeans are still trying to find. They're trying to find that price level that's going to stimulate demand. I don't think wheat's found that level yet. We haven't had any private sales of soybeans this week, and I think that's probably a combination of China, for one, having enough needs purchased now from that October through February timeframe, and then also, the shipping costs are increasing substantially, not only here in the Gulf of Mexico because of low water levels, but also Panama Canal. So it really makes our shipping much more expensive from the U.S. to these foreign buyers. And so I do think our export sales here in the next couple of weeks going to reflect a slowdown in these sales. And hopefully, as we move into harvest time frame, we can find some price levels that'll stimulate some better demand. And as our basis widens out, some end users step in and start to find some forward coverage.
Well, the value of the dollar is not helping anything either on the U.S. dollar index. It's still around 105. Now it's above 105 this morning at 105.045. Of course, we had the PPI numbers that came out this morning. Right now, the dollar index is up about 300 points. Any takeaway from the PPI data that was released? Could that have a spillover impact here on the grain trade and the livestock trade?
Yeah, it tells us inflation numbers are getting a little bit hotter. They've increased for the last 2 consecutive months, first time since I think June of 21. So it's not a real positive for our economic data. With the higher dollar, as you mentioned, it's certainly putting pressure against gold and silver this morning. I think that probably spills over into the fund managers' mindset when they look at the corn, soybeans, and wheat markets, that those markets may be a little bit overvalued actually, and want to liquidate some long positions or even put some pressure against the short side of things. So it's not a bullish scenario at this point in time. So far, technical support has held in soybeans and in corn, and they may be tested here in the next several weeks as we get more harvest progress coming into the markets.
Okay, we'll come back in a moment, and I have some beef and pork export numbers that I want to get your take on that. What did that mean? You might be surprised. We'll talk about them in just a moment. We are back talking with Brian Hoops of Midwest Market Solutions. And Brian, on Thursdays, we always analyze the weekly export sales report, unless, of course, it's a holiday on a Monday. But anyway, we got the numbers this morning. We just went through the grain side. Now I want to take a look at the beef and pork export sales for this past week. And here they are. Let's have the grand reveal. On the beef, what is that? 6,200 tons? That's all the beef we sold last week. Pork came in at 23,100 tons. Let me look here. The beef sales would be down 48% from last week, and last week was pretty terrible. The pork sales were down 12%, it says. What is up with the beef sales?
Well, Marlon, you teased a surprise, and it wasn't a good surprise. We are seeing a very disappointment in the beef. Just, in fact, China came in and were the best buyers of U.S. beef last week. But it was about 2,000 metric tons, so about a third of their total sales for the week were to China. There was some other Asian buyers, but really a lot of people were out of the marketplace, just completely stepping away from U.S. beef prices. So I think this, we had 1 week rebound. We've been trending lower last 3 or 4 weeks after a pretty good summer sales, but this is probably a strong indication that maybe we're finding price levels that some of these foreign buyers are backing away from. And you mentioned the dollar in our last segment. Certainly that higher dollar is not going to help us out as far as beef and pork sales. China was pretty largely absent out of the U.S. pork market. Mexico is the biggest buyer. Of about 25% of all sales went to Mexico last week for U.S. pork. And you can see without China's buying input in the pork market, our sales drop sharply because they're that important to us as far as a buyer of our pork products.
All right, well, let's take a look at how we finished yesterday on our livestock trade on the futures and on our quotes from bar chart. We were lower on live cattle yesterday. December was down 60 at 187.85. That'll be our starting point today. On the feeders, we had October down 220, yikes, at 259.05. And on the lean hog trade yesterday, we closed with the December down 55 cents at 76.35. Brian, I thank you for the information. I want to leave you with 1 point here. The crude oil trade this morning. This is a nail biter. October up $1.33 at 89.85, Christina. It got over $90 a barrel for a little bit and then backed off a little bit. Getting scared of heights here. Brian, thanks again. Brian Hoops of Midwest Market Solutions with us here on a Thursday morning. Christina, there goes the oil price again.